Well, welcome back. Well, since the market tanked, rallied and then tanked again, we've heard plenty of stories of technical analysts or chartists who got out in time. In fact, just before the recent dead cat bounce, we had a kind of consensus among the chartists that a rally was actually imminent, Pete.
So where are they getting this information from, Nina, and what do they see happening now? Lance Lai is the Chief Investment Advisor to ACE Capital, a fund for Japanese investors, and he's got an interesting take on all of this. Lance, thanks for joining us on Moneymakers.
My pleasure, Peter.
All right, now, Lance, why don't you tell us what you think's going on right now, and we'll pull up a chart that we've got, which we brought in as well.
Okay, fantastic.
Let's just see that chart, guys. While it's coming up, Lance, why don't you sort of fill us in on what you think's going on at the moment?
Okie doke. The chart's just come up now. Yeah. And basically at the very top left corner there, you can see that you've got a topping of the market at 1,444 there.
So we're talking about July 2000, right?
Correct.
And with this massive drop. Now, what was that time in history, Lance?
That was the tech bubble, Peter.
Yeah, okay. And then the tech bubble, there's a crash of all the IT companies, and then what else kicked in around 2002, July?
Yeah, well, look, you had the terrorist attack at September 11, 2001, so that's the other very large spike down that you can see.
Yeah.
You know, so you could see that the market was actually heading down already, and the terrorists really helped it along. Yeah,
they really sort of drove it down. Now, that's quite interesting. Now, see how that, over a period of about 2 years, that happened. And then let's have a look at the bottom there, because I guess at the moment we're trying to find bottoms in this current market. What was that bottom going on there?
The bottom there was the US basically preparing to go to war, and there was a lot of fear around that time. Yeah. And you can see from that chart there's a lot of spikes low, and they were rejected, and they were spiking low, and they was rejected again. The interesting part of that is that by the time they ceased fire, and that was basically in November of 2003, right. Where you can just see there's a little uptick happening. The combat had already ended, the conflict was over, and the market was well on its way to recovery. I mean, interest rates in the US had been brought down to negative real interest rates. There was a lot of liquidity injected into the system, and that's why you see this rise happening there.
So what we're seeing is there's like a 45-degree line between 2003 or something up to the, well, a bit below the peak of last November. Is that where we haven't got lines drawn in here, but if we could draw a line around all those little troughs, those little spikes as you call them, we would see that where that hump is, that final hump, that was like an overshooting of the market, wasn't it?
Absolutely. Well, there's no line there at the very moment, but if you could draw a line through, there's actually like a neckline that it goes through, and you can see it falls off and then it bounces back up, and actually bounces back up to what we call support and resistance.
And of course, living through it, this was before like the November crash in a sense. These are like little corrections. And I remember occasionally you give me a call saying, I'm worried. This is one of the reasons why I brought Lance on tonight, because he actually got me there before this crash and started saying there's a lot of signs out there that this is all going to go pear-shaped. And in the old days, we used to have wizards used to read the entrails of dead animals, but now we've got chartists like Lance actually seeing this sort of stuff. So why I've got you on the program tonight is, what are you seeing now with the fact there's a big slump and it's gone up and down like a bit of a seesaw at the bottom? Are we at the bottom, Lance, or do you feel as though there's another drop to come?
Yeah, look, my system I call the right angle system, and it's a combination of technical indicators that I use. And the chart that we brought up...
Just have the second chart, guys, if you could.
Actually, the first chart... yeah, look...
We'll go to this one.
Okay. But basically, what we're seeing in this one, this is the SPY hourly. And the
SPY basically tells us what they think's going to happen on the stock market each day in Australia, isn't it? The SPY is like a futures of the local stock market.
Yeah, it's a reflection of the ASX 200. It's a 24-hour contract, so unlike the physicals, you get the gaps that are filled in the evening.
Okay.
And
people like you play this in a sense, don't you? You try to anticipate where the market's going to go, and you take a position, either a short position or a long position.
Correct.
And I know you told me last week you sold out all your shares on one particular day.
On Wednesday, actually,
On
Peter.
Wednesday, yeah, which was a good time to sell.
That's right. We had a very bad day on Thursday and Friday.
You caused it selling out, Lance. What do you reckon?
Yeah, I wish. I was that, yeah.
All right, but I think what people watching this program tonight, seeing these kinds of charts, what are you seeing in terms of the volatility and the ups and downs? And you often refer, when I talk to you, to the S&P 500 and certain levels.
Correct.
So what level are we at now on the S&P 500? It's the US broad measure.
Yeah, we're around 900 at the moment.
Right.
My marker is 961, right. and I've had that. We've talked about that before previously.
Yeah.
And 961 is a mark in the sand that I've had for quite some time.
So do we need to see, if we're optimists, and I'm not trying to make money out of falling markets like some people at this table, you'd like to see it go through 961 and stay above there, wouldn't you, Lance?
Correct.
Okay.
What we're seeing now is actually, I think it's a gravitational to around that point. Yeah. And that's why we're seeing huge volatility. Last week, we went all the way up to 1,000 odd. It came all the way back. Last night, it was very threatening on the downside. It actually went as low as 886 on the S&P 500. Our market on the SPY, not on the physicals because everyone was asleep, went down very low as well. And those levels were somewhat scary levels, but what we're seeing is a very large range that's hovering around this 961 mark.
Okay, so if we got a rash of fantastic news like the China type stories coming out right around the world, that could force the weight of money to make you to be a little bit more optimistic. But at this stage, you're not seeing enough to put your hand up to be an optimist.
Absolutely. I mean, I think that the reason why we didn't fall off so badly today, and in fact we had I thought was quite a strong day today. I think because we are tied in to the China story and the India story, and because of the stimulus that we've had, our markets have been held up a little bit. And that's what's happening.
So even though you're a bit worried in the short term, your longer term view is that Australia's pretty well placed, and the companies like BHP are in good positions because of the link to China.
Absolutely, absolutely. I think Hans was speaking earlier about that. I overheard, and I'm definitely of that camp.
Okay, Lance. Thanks for joining us on Moneymakers.
My pleasure, Peter.